Welcome to Herd Mentality, a podcast from StoneX where we discuss global dairy markets and what's driving them. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and past results are not necessarily indicative of future results. We're recording this on Tuesday, May 20th. With me this week is Desmond Strelzow. He's a commodity risk manager from the Dublin, Ireland office. And this episode is going to be focused on cheese, first on European cheese and then on U.S. cheese. And we had a significant rally in the U.S. cheese market over the past couple of weeks that seems like maybe it peaked last week, but when I was looking for reasons for the strength that we were seeing in the U.S. market, I was looking at the quotes for the OTC cheese contracts that we list in Europe. We don't have a futures contract for cheese in Europe yet, but we have pretty active OTC contracts, which give us some view in terms of what the market is thinking for European cheese prices moving forward. And the nearby OTC cheese prices were relatively flat, but there was a decent amount of strength in the deferred contracts. Desmond, welcome onto the podcast. And how much did those futures, or excuse me, OTCs increase last week?
Hi, Nate. Thanks for having me, first of all. Glad to be back. Yeah, they increased about 150 euros, I'd say 125 euros. We saw particular strength in the Q3, really is where we saw the most amount of interest, and a little bit into Q4, while the front end stayed relatively stable.
So for the U.S. listeners, that's 100 a ton to 150 would be 5 to 7 cents a pound. So it's a pretty good increase. And so what does that bring us up to in terms of price levels for Q3?
Well, Q3 mozzarella we're trading 43.25 was last. And that's up from a high of about 42 only a week and a half ago. And there's good bit of buying interest still at that level, and offers are pulling back relatively quickly still. So I think the market now is probably 43.25 at 44, and probably going to trade somewhere close to 44, close to the offer if it's going to trade again.
So 43 would be about 219 a pound. 44 would be about 225 a pound. Cheese futures here in the U.S. are trading $1.91 to $1.95 over that period. So Europe's still at a pretty good premium. And you mentioned mozzarella, but we list OTC contracts for mozzarella, Gouda, mild cheddar, and cheddar curd. Which of those is the most active?
In general, Gouda is actually the one that trades the most. We can do some good volumes in Gouda. And mozzarella would be second. And there's some obvious spreading opportunities and stuff involved between the two of them. Then we do trade a mild cheddar and a cheddar curd, and those two are relatively interchangeable for the trade. They're happy to do either, and their prices kind of fluctuate and around themselves, and the correlations are very strong. So people are willing to put a price up for either of those if one of them is bid or offered. But yeah, it's really the Gouda that trades the most. But recently, this last week, all of the interest has been in the mozzarella, and that's really where the flow has been.
Interesting. So in terms of what's driving it, I mean, the recent data for Europe hasn't been particularly bullish. Like the milk production numbers, the weekly collections for France and Germany have improved quite a bit. The exports for March were a little bit better than forecast, but cheese exports were only up, I think, 3.3% from a year ago. Cheese production in March was up about 1.7%. Like there's nothing that seems super bullish in the recent data, and yet the cheese is increasing quite a bit last week. Do you have any idea what's driving it?
If I had an idea, I would be, I would be a wise man, because I have no clue. I have no clue, and I've scoured the market, asking people, traders, producers, end users, what the story is. And to be honest with you, no one can give me a straight answer. quite honestly, it seems to be defying gravity. We're here in the middle of the flush. It's a relatively fresh product. You would expect, even with all the valorization models, it wouldn't even be mozzarella that's the strongest yet. That's the one that seems to be in the most demand. Um, yeah, market. I can't explain it, Nate. I wish I could, but I got no reason for it. And perhaps it's a selling opportunity. I don't know, but that's all I could say.
There was a little bit of strength for butter last week, right?
Yeah, there was. Butter's slowly creeping higher. Just traded today, Q3 up again, about 50 euros higher. So we're trading 73.60 in Q3 butter. So it is firmer, but if it was really driven by butter, we'd see more interest in probably the cheeses that have more fat in them, I would hazard a guess. So Gouda, because mozzarella has the least amount of fat in it. So it's just a little bit of a difficult one to kind of wrap my head around.
Is I did my monthly webinar here this week, and I'm getting a little bit concerned about the dry weather in Europe. Has there been much discussion about that?
There has been, yeah, definitely in Northern Europe.
Yeah,
Now here in Ireland, I'm sitting staring out the window and it is raining. But that's the first bit of rain we've had in, I mean, it's rained maybe 2, 3 times over the last 6 weeks, which is highly unusual. Now, we did have a nice, it was relatively wet over winter, I think. So there's probably enough moisture in the ground. Anecdotally, we did hear a little bit that it was too dry.
yeah.
But yeah, other than that, collection so far, the data from collection seems to be quite strong, especially in fat content um, in the milk. So I, again, I fail to understand the strength we're seeing in prices, considering that the data we have so far, anyways, is that the collections are good.
Well, I appreciate you coming on and sitting in the hot seat, despite not having a great answer for why the cheese prices are up, but they're up.
Yeah, that's about all I got. Sorry, Nate.
All right. Thanks, Desmond.
All right, thanks, Nate.
So we may not have a great explanation for why we saw the strength in the European OTCs last week, but I have a decent explanation for why we've seen the strength in the U.S. cheese market that we've seen. The spot market's gone from the low $60s 2 months ago, which is about 3,100 euro a ton, up to $1.90 a pound here late last week, early this week, which is about 3,700 euros a ton. And the easiest explanation is just that $1.60 was too low. The price was depressed by the idea that we were going to have an overwhelming amount of cheese production, an overwhelming amount of cheese due to increased processing capacity this year. And while we have seen a little bit better cheese production growth in the US, we went from year-over-year declines in November, December, and January to small growth, like March was up 1.4%. The 1.5% increase in cheese production in the last couple of months has not been overwhelming, and it's largely been offset by exports. With U.S. cheese prices way below Europe, way below New Zealand, we're seeing exports running mostly above year-ago levels. And first quarter cheese production, after adjusting for leap year, was only up 19 million pounds, while exports were up 26 million pounds. So we exported, the exports have fully absorbed the increases in production that we saw during the first quarter. And that has kept inventories on the light side. I think U.S. cheese stocks for March were still down about 4.3% year over year. And frankly, when you look at a decline in inventory that big, it's arguing for $1.80, $1.90 type cheese prices, which is where we've seen the spot market rebound to. So it it's not that the underlying fundamentals changed a lot in the past 2 months. It's just that these fears about an overwhelming wall of cheese coming down on us have so far not proved correct. and the market is still a little bit on the tight side, helped along by exports. That doesn't mean that everything is bullish. Domestic demand is still pretty terrible. It was below year-ago levels in the U.S. in January and February. It was up just slightly in March. After adjusting for leap year, I think it's down about 18 or 19 million pounds year over year. And our imports, U.S. imports of cheese, were up about 13 million pounds in the first quarter. So thanks to that weak domestic disappearance and the increase in imports, the cheese stocks are getting closer to year-ago levels. January inventory was down 6.9%. And like I said, by March, it was only down 4.3%. The increase in inventory, the seasonal increase in inventory between January and March was bigger than usual. All right. So we're not suffering from a huge increase in cheese production that's depressing the market, and the exports are keeping the U.S. market relatively balanced to a little bit tight. But the weak domestic demand is an issue, and it's resulting in a little bit faster than normal inventory buildup. If we don't see an improvement in domestic demand and these new plants continue to ramp up production, we potentially do get inventories back above year-ago levels in the second half of 2025. Now, it's very unusual for U.S. cheese consumption to drop. So I am expecting some improvement in domestic demand in the back end of the year that will keep inventories balanced or a little bit below year-ago levels. So I'm not terribly bearish, but we're going to need to see better domestic demand to keep the U.S. market balanced to a little bit snug. And so far, we haven't seen that developing. So I don't know. I'm not bullish at $1.90 a pound. I think $1.80 to $1.85 is a little bit more reasonable. If fears about increased cheese production reassert themselves, then we can quickly drop back $1.70, maybe in the $1.60s again, but I think this rally has spooked some buyers and maybe we find support in the $1.70s. If concerns about increased production kind of stay on the back burner, and if the exports remain very, very good, maybe we can hold in the $1.80 to $2 range into the third quarter, maybe even into the fourth quarter. But personally, I think the cheese market, U.S. cheese market, softens a bit back towards $1.80, mid $1.70s, with domestic demand still running a little bit weak, but production not turning out as big as expected.
The StoneX Dairy team spans the U.S., EU, Asia, and Oceania, providing market intelligence, analysis, and forecasts through our interactive data platform called StoneX Plus, as well as full-service brokerage on the major dairy exchanges, the CME, EEX, and SGX. If you're interested in finding out more about our market intelligence or brokerage services, you can find more information on stonex.com.
This communication is issued in the European Economic Area by StoneX Financial Europe SA, SFE by the SFE presenters noted. StoneX is the trade name used by StoneX Group Inc. and all its associated entities and subsidiaries. StoneX Group Inc. companies provide financial services worldwide through its subsidiaries, including physical commodities, securities, exchange-traded and over-the-counter, under derivatives, risk management, global payments, and foreign exchange products in accordance with applicable law in the jurisdictions where services are provided. References to certain over-the-counter products or swaps are made on behalf of StoneX Markets, LLC SXM, a member of the National Futures Association NFA and provisionally registered with the U.S. Commodity Futures Trading Commission CFTC as a swap dealer. SXM products are designed only for individuals or firms who qualify under CFTC rules as an eligible contract participant ACPAT and who have been accepted as customers of SXM. Wealth management is offered through SA Stone Wealth Management Inc., member FINRA/SIPC, and SA Stone Investment Advisors Inc., and SEC Registered Investment Advisor, both wholly owned subsidiaries of StoneX Group Inc. StoneX Financial Limited SFL is registered in England and Wales, company No. 5,616,586. SFL is authorized and regulated by the Financial Conduct Authority registration number FRN 446,717 to provide to professional and eligible customers including arrangement, execution and, where required, clearing derivative transactions in exchange-traded futures and options. SFL is also authorized to engage in the arrangement and execution of transactions in certain OTC products, certain securities trading, precious metals trading and payment services to eligible customers. SFL is authorized regulated by the Financial Conduct Authority under the Payment Services Regulations 2017 for the provision of payment payment services. SFL is a Category 1 ring dealing member of the London Metal Exchange. In addition, SFL also engages in other physically delivered commodities business and other general business activities which are unregulated and not required to be authorized by the Financial Conduct Authority. StoneX Financial Europe SA. SFE is a securities trading firm registered in the Grand Duchy of Luxembourg under Company No. RC Lux B 10821. SFE is authorized by the Luxembourg Ministry of Finance and regulated by the Commission de Surveillance du Secteur Financier Registration No. P00000 012 to carry out, inter alia, the activities of investment advisor, portfolio manager, professional acting on own account, broker in financial instruments, and commission agent. StoneX Financial Pte Ltd Co. Reg. No 2011305998R SFP is regulated by the Monetary Authority of Singapore and is a capital market service licensee for dealing in capital market products, an exempt financial advisor for advising on investment products and issuing or promulgating analyses/reports on investment products, and a major payment institution for cross-border money transfer service. StoneX Financial HK Limited C.No. BCQ 152 SHK is regulated by the Hong Kong Securities and Futures Commission for dealing in futures contracts. StoneX Group Inc. acts as agent for SFL in New York with respect to its payment services business. StoneX Financial Thai Limited SFA Akin 141774727 holds an Australian financial service license and is regulated by the Australian Securities and Investments Commission AFSL 345646. StoneX Securities Co. Limited SSJ Co. Reg. No 010401047199 is regulated by the Japanese Financial Ser. ISIS Agency as a Type I Financial Instruments Business Operator. Kanto Local Finance Bureau FIBO No. 291 is a member of the Financial Futures Association of Japan for dealing and broking FX and FX option transactions, and is a member of the Japan Securities Dealers Association for dealing and broking stock indices and option transactions. The information herein is not a recommendation to trade nor investment research or an offer to buy or sell any financial product. It does not take into account your particular investment objectives, financial situation, or needs, and does not create a binding obligation on any of the StoneX Group Inc. of companies to enter into any transaction with you. You are advised to perform an independent investigation of any transaction to determine whether any transaction is suitable for you. This material should be construed as the solicitation of an account, order, and/or services provided by the FCM division of StoneX Financial Inc., SFI NFAID 0476094, or StoneX Markets LLC SXM NFAID 0449652, and represents the opinions and viewpoints of the individual authors or presenters and does not necessarily reflect the viewpoints of SFI or SXM. It does not constitute an individualized recommendation or take into account the particular trading objectives, financial situations, or needs of individual customers. Additionally, this material should not be construed as research material. The trading of derivatives such as futures, options, and over-the-counter OC products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. All references to and discussion of OTC products or swaps are made solely on behalf of SXM. All references to futures and options on futures trading are made solely on behalf of SFI. SXM products are intended to be traded only by individuals or firms who qualify under CFTC rules as an eligible contract participant ACPA and who have been accepted as customers of SXM. SFI and SXM are not responsible for any redistribution of this material by third parties or any trading decisions taken by persons not intended to view this material. Information contained herein was obtained from sources believed to be reliable, but is not guaranteed as to its accuracy. Contact designated personnel from SFI or SXM for specific trading advice to meet your trading preferences. SFP may distribute analysis/report produced by its respective foreign affiliates within the StoneX Group of companies pursuant to an arrangement under Regulation 32C of the Financial Advisors Regulations. Recipients should contact SFP at 6563091000 for any matters arising from or in connection with this podcast. No part of this material may be copied or duplicated in any form by any means or redistributed without the prior written consent of StoneX Group Inc. The podcast herein is not directed to or intended for distribution to or use by any person or entity who is a citizen or resident of or located in any locality, state, country, or other jurisdiction where such distribution, publication, availability, or use would be contrary to law or regulation. Copyright 2024 StoneX Group Inc. All rights reserved.